If somebody has the Mr. Niyal Singh's number, he can contact them. Yeah, I think he has been muted now. Right. Thank you. So as we were speaking about the budget, and my co-moderator, Mr. Suresh Prakash, has also joined in. Welcome. And I am thankful again to Mr. Shailendra Paliwal for giving us an opportunity to organize a program on budget. I can see the other council members, Mr. Tara, also there in the group. Let me first of all introduce Mr. Rakesh Gupta. I would say Dr. Rakesh Gupta, who is a very eminent advocate on direct taxation. And if I go by his profile, it might take about 10 minutes to go through that. But still, I would like to briefly introduce to all my learned friends about him. He has did his graduations from St. John's College in Agra and secured a second rank. Then he is a fellow member of all the three institutes of Chartered Accountant, Cost Accountant, and the Company Secretary. He is a MBA in Finance. He has done his LLB as well as LLM, and he was the first rank in the university and won the gold medal. He is a doctorate in corporate governance and business ethics. And most importantly, he has been appointed as a member of Income Tax Appellate Tribunal under Ministry of Law and Justice, which is a post equivalent to the additional secretary's rank at a very young age of 38 years. And he resigned later on from there. Then he is an author. He has co-authored about 2 books on search and seizure and assessment of such cases along with his partner, Dr. Rajki Agrawal, and on taxation of real estate developers and joint development arrangements with accounting aspects, which was published by the Taxman. Then he has earlier practiced as a chartered accountant from 84 to 2000. And after that, he has been practicing as an advocate. And he's been appearing before the Appellate Authority of the Income Tax, High Courts, and Supreme Court of India. He has also represented the UP government in Supreme Court in India as a special counsel for 3 years. And he has been appearing on various news channels. He has been delivering his lot of other lectures on budget. And I just received one more message on my WhatsApp from another group where he's going to give his lecture at 5 p.m. So, which I came to know now. But anyway, he will give us full time for our program. And 2 more things which are very, very, although not written in the profile, but since I know him personally for so many years, that he has become a very good singer, as well as of late he has started writing a lot of poems on the these hot topics of the day. You can say the headlines of the days, and I have been liking his poetry too much. Shortly, a new book is going to be launched by him for him on his poetry. So he's a very multi-skilled personality, and I'm sure that all of us will have his address, which is going to be useful for all of us to know about the budget. In fact, when we talk about the budget, most of the people are interested only in personal taxes, because all of us are concerned with that. In one of the WhatsApp message, which we could see that only about 3 to 4 crore people are affected by who are filing the income tax returns. But 135 crores are affected because individual taxes have not been considered, because they have been ignored in this budget, that there is no change in the income tax slabs. So that's again a very funny part of our country's system and the thoughts about the process, about the budget and the people. According to, I will just take 1 or 3-4 minutes more about the budget. I will give my overall view about the budget, and then I will request our chief guest for the day, Mr. Rakesh Gupta, to deliver on the direct taxes. And after the program is over, we will open the house for about 10 to 15 minutes for the question answer session. And after that, Mr. Suraj Prakashji will also give something about for about 5 to 10 minutes on the indirect taxes, because not many changes are there on that. But since we will be having some time, so we will be covering a little bit more about the indirect taxes as well. So I will just take 4 minutes more. That since it is I would consider it as a macro expansionary growth budget, which will take the economy of this country towards the 5 trillion target set by the Modi government 5 years back. So we are heading towards that. The most significant part, according to me, in this budget was the increase in capex from 5.5 lakh crore in the last year to 7.5 lakh crores, a whopping about 35% increase in the capex budget. I think this is going to drive the economy to a large level. In fact, this is going to be, and against the 7.5 crores, it is going to be 10.68 lakh crores if you add the grants to be given to the states for the capex. So this 10.68 lakh looks like a very humongous task for the government, but looking at the collections, in January, we got about 1.4 lakh crores from the GST collections, and that too during the Corona times. So we could see that the tax collections for the government is increasing day by day, despite the Corona issues have been there for the last 2 years. So I think the most variable time, the point was that how to get this money for this capex. I think the government has visioned very rightly that with the collections increasing, they will be able to get this money for this capex. This capex will certainly boost the supply side and will have a multiplier effect, resulting in more money in the hands of the people. And I think it will create more job opportunities as well, and it will reinvigorate the economy at large, increase the liquidity in the system, and improve demand and consumptions both. A lot of capex is also in, this was the capex only from the government, and we can, since the PLI scheme has been launched about 2-3 years back, and a lot of incentives have been given under the PLI scheme, so we can expect a lot of investments coming from the private sector as well under the PLI as well as in the other schemes. The focus has also been given to the green initiatives like solar energy and EV sector. The growth rate has been, in the survey, it has been put at around 8.5%, which is again a very high in overall in the world. Next focus, which has been targeted in, that could be, we can say that this is one of the most hot topic in the budget is the cryptocurrency, or we can say the digitization or digital assets. These are some of the new words which have come up in the budget. So a lot of focus has been given on digitization, which according to me improves the working of the government and other departments. Digitization of national digital health ecosystem, land registry, 5G spectrum rollout, smart passport system, digital university, and giving infrastructure to the data centers. All this will go a long way in digitization of this country. So as we were discussing about the crypto, the new dictionary word which has been come up is the digital assets, which I would request the speaker to look into that. And it's a new concept which has been brought into the budget. And as we all know by now that the tax has been 30%, but there are many more things to be talked about in this, which I think Dr. Rakesh will cover into his address. The overall total budget has been zoomed to a massive around 40 lakh crores. And out of this, a huge allocation of 5.25 lakh of crores has been made for the budget, defense sector. And the most important point in the defense sector is that 68% of this budget allocation will be given for the supply from the indigenous sources. So the defense which happened so far has been procuring more and more from the other countries, importing a lot of defense equipments. A lot of focus has been given on indigenization of the defense sector. So there are so many other issues which will be there, and I think with only thing which all people were expecting, that the personal taxes slabs will be touched upon, which has not been done with, but whatever the constraints will be there with the government. But looking at the inflation and other things, I think this is on a very lower side, and this needs to be changed quite drastically. One more provision which I was reading in some newspaper is that change in the section 194(1)(a), where the TDS on the property sale will not be only on sale value, but it will be on sale value plus the stamp duty on that. If I'm wrong, kindly correct me after, Dr. Rakesh can correct me on that in case if my understanding is wrong. And I think a lot of other changes which we do not know, Dr. Rakesh will take it forward. With this, I will request Dr. Rakesh Gupta to give his address. I welcome him again on this show, this program. Thank you very much.
Thank you, Yogesh ji, Chairman and other office bearers of Northern India Regional Council, Honorable Shri Suraj Prakash ji, and very eminent members of this august body, my friends. I am presenting the budget talk on this platform of our institute, Cost and Cost Accountants of India, after a very long time. But then I tell you, when I joined chartered accountancy way back in the year 1980, to qualify at that time it used to be called cost and works accountancy, I mean, was considered, if not more, equally tough as chartered accountancy. And I tell you, very recently, I had an occasion to meet a very recently retired Supreme Court judge who himself was chartered accountant. When he came to know that I am also, he knew the current name with ICWA, then he said, Rakesh, you are also ICWA. How did you do that? I mean, that shows the kind of respect our this institute commands, and I am proud to be a member of this institute. So friends, as Yogesh ji has put the foundation for me to pick up the thread in respect of the budget, but more particularly with the finance bill. And I have been told by Yogesh ji that most of our members are into the direct taxes more, and therefore I can take the liberty, I mean, to be somewhat technical also. So friends, finance bill 2022 has come out from the bill, and it is, I mean, before all of us. And so far as the economic aspects are concerned, Yogesh ji has touched them, and we all must have read. But then I'm on certain broad features so far as the finance bill 2022 proposals are concerned. Now, this finance bill is not different from its predecessors insofar as bringing the change with the retrospective effect is concerned. Though in 2014, the then finance minister, Shri Jayatri, said that we will not bring any retrospective amendment, come what may. But then I would say that there must be some compulsions at the end of the government, because of which some retrospective amendments perhaps are perforce brought. Similarly, some amendments which are proposed in this finance bill, even if the अशोक जी आपका खुला हुआ है, ये गाने की आवाज आ रही है, प्लीज लेट मी मेडिटेट, प्लीज हेल्प मी. यस, जल्दी आ जाओ. Yes. So, though certain amendments are like this, that which have been worded in such a manner that though the legislature says that they will come into effect prospectively, but I am pretty sure when it comes to the litigations, it would be pressed on behalf of the government itself by their counsels in the court that even if they have been enacted with a prospective effect, but then since these amendments are curative in order to prevent the mischief which was never intended by the legislature in its first place, therefore they should be read to have come into effect with retrospectivity. Then, of course, simplifications which we which we all always talk now in respect of certain amendments, this is alien simplification because the way, and more particularly the provisions of the trust. And I'm at loss to understand, and which I always say by overemphasizing, that the trust provisions under the Income Tax Act now are viewed with so much distrust that every year the kind of shikanja the government keeps on doing on the trusts, that now even the charitable trusts have started thinking if at all is there any benefit for them to claim this benefit from the government, and rather is better to pay 30% tax. And the compliance costs for these charitable institutions have gone tremendously. And then kindly see the consequences of even the slightest non-compliance. Now it comes with a very heavy cost. Therefore, many proposals in this finance bill are prone to increase litigations, though I would say as a litigating lawyer, now it is a grand feast, I mean, for people like us. But if I see as a citizen, uh, it should not be that much litigation centric. Anyway, so the first proposal which I would like to give is about the updated return. Now, Honorable Finance Minister, in her relatively brief budget speech, made a reference of this updated returns facility. Of course, it is a facility that with the advent and with the introductions of several measures by which the information is being collected at the end of the government, more particularly the tax department, then there is every possibility for the taxpayers to commit some errors, some omissions by not including certain incomes, and therefore opening this kind of a window for the first time in the history of the tax provisions, that a facility of filing an updated return is sought to be extended. So what is updated return? That apart from the return which is often seen by us and which we'll call the original returns, whether that return is filed belatedly within a particular time span or the originally return is capable of being revised. So irrespective whether a person has filed his return originally, now he is entitled to file a bill, he is entitled to file an updated return. And that updated return, in what form will it come, what particulars it would require, I mean, that is in the womb of future, because that power has been given to the board to prescribe, I mean, the nitty-gritties and the nuances. But then this updated return can be filed within 24 months from the end of the assessment year. This is very important. It's not end from the end of the previous year, but it's the end of the assessment year. So 2 years time window has been given for a person to file an updated return, and but then it should not be a return of loss. If somebody wants to file a loss return in the garb of updated return, then it is clearly prohibited. Similarly, if a person has already filed a return, then this updated return cannot be filed showing the decrease in its tax liability, because the concept of updated return is for the purpose of bringing some additional tax to the government. And therefore, any updated return which has the effect of increasing the refund or which is resulting in the refund, is I mean, it is not capable of being filed. Similarly, if a person has been searched or surveyed, then such person who has been searched or surveyed then cannot file the updated return for the year of search or survey as well as preceding 2 assessment years. So this is the disability qua a person in whose case either the search has taken place or the survey has been conducted. Then comes that if a person has already filed updated return, then he can, or for a particular year, then he cannot be permitted to file another updated return, because this is a, at least qua each year, it is a one-time concession or facility or what should we say, I mean, chance to file updated return. But then if one having availed this opportunity once for a particular year cannot be permitted to file another updated return qua that year. Similarly, if an assessment or reassessment proceeding is pending, or for that matter the revision proceeding is pending or has been completed in respect of that person for a particular year, then also qua that year this person is disabled to file updated return. There are several ifs and buts, and those ifs and buts have not come to an end. So if there is informations with the income tax department, with the assessing officer under SAFEMA or under black money law or under PMLA or under Benami Property Act in relation to a particular person for this assessment year, and that information has been communicated to the SSE, then post communication, then he is debarred, he is disabled, he is not competent, he cannot file the updated return. Similarly, if some adverse information has come from abroad under the exchange of information pacts with the different countries, and communications to that effect now has been passed on to the SSE, then post communications, then he cannot file updated return for that year. Similarly, if any prosecution has been initiated or launched or instituted against a person for a particular assessment year for any default as prescribed under the Income Tax Act, then also he cannot file the updated return. And kindly, and above it, the board CBDT, which is the highest administrative body, now has been empowered to specify the persons or the class of persons who would not be able to file the updated return. Now kindly see, one concession which has been given in 4 lines now has come with as many as 13 riders or 13 disabilities qua return, qua year and qua person. So that is how a very peculiar and a very peculiar way of granting the relief in our system. Then once a person is competent to file updated return, then he will file, but then he will enclose the proof of additional tax which is due as per the provision of this act along with the return of income. And then what is the cost for filing this updated return? The cost of filing the updated return is that in case he is filing his return of income within a period of 12 months from the end of the assessment year, then 25% of the tax and interest he will have to cough out. And in case he is filing his return within 24 months from the end of the assessment year, then it becomes a double, meaning thereby the 50% of the tax and interest. And as well of and we may be knowing that if a person discloses some income from the undisclosed source, suppose if he has got deposited say 5 crores rupees in his bank account, now he wants to declare that amount in his income tax return and updated return. Now that income now will not be from any prescribed source of income. It will be income from undisclosed source. And when any income is from undisclosed source, then there is a higher tax rate. And effective tax rate on such kind of income is 78%. So 78% tax, then 50% of it. So that will be the cost for filing the updated return in case he wants to file it post 12 months from the end of the assessment year. There are several technical, hyper-technical nuances, but then I will keep it for some other day's discussion. Then comes about the companies who have been given the concessional tax rates in case they comply with certain conditions and they do not avail certain prescribed deductions or incentives. And section which has been given for such companies is section 115 BAB companies. There are several conditions, or one of the condition is that such company must commence its production and manufacturing on or before 31st March 2023. I'm sorry, I'll take water, please. So, as all of us know, that the pandemic has stalled everything, and therefore the government, taking note of that hard and stark reality of our lives, has said that let it be deferred by 1 year. So, if such companies which are otherwise entitled to claim this concessional tax of 15%, even if commences its productions of manufacturing on or before 31st March 2024, as against hitherto 31st March 2023, then that will be okay. Then one very important amendment has been proposed, and that too in a very innocuous and very ostensibly innocent looking manner, and that is the authorities to conduct a survey. Not in a very distant past. During this pandemic period itself, the government brought one act. Initially, if you remember, ordinance was brought to extend various time or various deadlines. So that ordinance was culminated into the act, and that act is, I mean, called affably, or in short, if you permit me to say, that is called TOLA, Taxation and Other Laws, Relaxations and Amendment Act 2020. Now, under that act, it was specifically provided that those authorities which are prescribed to conduct survey will only be those authorities who are subordinate to the Director General Investigation or the Chief Commissioner of TDS, meaning thereby that only the investigation wing or the TDS wing alone were made competent to conduct survey. Now, by this Finance Bill 2022, that investigation and TDS, I mean, both words now are proposed to be sent to the dustbin of history, meaning thereby that all those authorities which are so mentioned and who are just subordinate to the Director General and who are just subordinate to the Chief Commissioner, meaning thereby the entire uh, machinery of the tax department over and above the inspector now would again be competent to conduct survey. So the survey, which otherwise, I mean, is considered to be a very potent investigation tool in the hands of the department, now seems to have been is proposed to be activated, I mean, the same vigor. Then there is one section, section 14 capital A under the Income Tax Act, which says that if there is an exempt income, obviously if an income is exempt, meaning thereby there is no tax on it, and therefore as a natural corollary, any expenditure incurred to earn that income would also or cannot be allowed. I mean, that is as good as 2 plus 2 makes 4. But even this kind of a provision was sought to be made under the Income Tax Act, and that too with retrospective effect. This provision came in 2001 with a retrospective effect right from the day when the Income Tax Act itself was enacted. But then, even despite the making such law clearly, there was one bone of contention, and the bone of contention was that what would happen that if there is no exempt income in a particular year, but expenditure has been incurred with an eye to earn the exempt income. Department's stand has always been whether exempt income in a particular year has resulted or not, but then expenditure incurred for the purpose of earning that income in any case would be disallowable. If you remember, the dividend, I mean, though of course has now been made taxable, it used to be exempt. So dividend may not have been declared by the company, thereby there would not have been exempt income in a particular year, but expenditure incurred in relation to that investment, which could have yielded dividend, that is a different matter, may not have yielded dividend. Now, according to the department's stand, now that expenditure was disallowed. But then courts in our country, reading the law as it stood in terms of the language employed by the legislature, understood the provisions otherwise. Board though came out with a circular, but then it is a settled law that the circulars may be binding on the tax authorities, but then are not binding on the courts. The courts have to interpret the law, and most of the times in terms of the language which has been employed by the legislature, and that is called the rule of literal construction. So the courts consistently, when I say courts consistently, then I mean to say various honorable high court now have held that even if have held that if there is no exempt income in a particular year, and even if there is some expenditure which has been incurred or which can be ascribed or which can be said to be incurred in relation to an income which, if had been earned, then would have been exempt, now would not be disallowed. So the proposed amendment now says that this interpretation placed by the courts is not in consonance with the legislative intent, and therefore the amendment, by inserting an explanation, is sought to be proposed in this finance bill, saying that for the removal of doubts, it is hereby clarified that no amount of expenditure will be allowed even if exempt income may not have been earned, accrued, arisen, or received by a person. And you see, this phraseology which is used by the legislature, I made a brief reference in my initial remark that though this amendment is proposed to be made from a prospective date, but then the language which has been proposed in this proposed amendment is such that which would compel or which may compel the courts to take this view that since this amendment is curative because it is for the removal of doubt and it is clarified that the law was like this and was always intended to be like this. So when the phraseology of the law is made and couched by the legislature in these terms, I say as a litigating lawyer that it sends, or say the litigating SSE, it sends shivers in my spine. But then such kind of expressions has been used not only under section 14A under this proposed amendment, but in other proposed amendments also. Then comes again to nullify certain judicial decisions. As I said in my initial opening remark, that hardly is there any finance bill when some judgments delivered by the courts are not set at naught. And this year's finance bill is not an exception to that kind of a trend. So there is a particular provision under Income Tax Act which prohibits the allowability of the tax. Though on the lighter side, somebody can say that all expenditures which are incurred wholly and exclusively for the purpose of business are allowable, and tax perhaps now is such outgo without which one cannot be allowed to carry on his business, and yet legislature by providing a specific provision says that there will not be any deductions on account of the taxes on profits. So this taxes on profits came up for interpretations because in 2004, if you remember, now the cess has also been made payable. Secondary education cess, health and education cess. So whether that cess ostensibly not covered under the definition of tax, whether can be claimed as an expenditure, that was a question. And Bombay High Court, Rajasthan High Court, and then thereafter, several benches of the Income Tax Appellate Tribunal took this view that tax does not include cess because the board in 1967 issued one circular in which the board itself took the stand that the cess is allowable deductions against the business profit. But this finance bill 2022, now taking the cue from one decision of the tribunal in Kolkata bench, now has proposed this amendment to say that the cess which is imposed by the Finance Act by the central government as an additional tax is part of tax. And the cess which was talked about by the board in 1967 refer to the cess which is imposed by the state government for a specific purpose, and therefore that cess which is imposed by the state government stands on a different pedestal, and the cess which is imposed through the Finance Act by the central government as part of additional tax now stands on a different pedestal. And Supreme Court in one decision reported in 83 ITR has said that cess is the part of tax, and therefore in order to nullify the Bombay High Court and Rajasthan High Courts and other decisions, this amendment is proposed. And this amendment has been proposed by making an ostensible declaration that this will come into effect from a retrospective effect from assessment in 2005 and 6. Now, there is one section under the Income Tax Act which says that all expenditures which are incurred wholly and exclusively for the purpose of business and which are not capital expenditure and which are not of personal nature will be allowed while computing the income under that business or profession. But then one explanation was added in 1989 to say that if there is any expenditure which has been incurred for a purpose which is an offense or which is prohibited by law, that will not be allowed, because such expense which is opposed or such expense which is incurred for a purpose which is an offense or which is prohibited by law now cannot be said to be incurred wholly and exclusively for the purpose of business, because such expenditures are considered as opposed to public policy. So one explanation was inserted in 1989, and that explanation said that if an expenditure has been incurred for a purpose which is an offense or which is prohibited by law will not be allowed. But then this phrase, now since having not been explained, therefore the interpretation was taken by the taxpayers that when it says that it's prohibited by law, perhaps it refers to the domestic law. Therefore, such interpretations placed by the courts, did not find favor by the proposed amendment, and that too by saying that it is not in consonance with the legislative intent. And therefore, now what would be the meaning of that phrase, which is there under explanation 1, that expenditure should not be for a purpose which is an offense or which is prohibited by law, now is proposed to be explained by inserting another explanation. This is height. One explanation is sought to be explained further by inserting another explanation to say that if an expenditure has been incurred in respect of the law which it does not, or which is not the domestic law, but then which is prohibited by any other law that in any other part of the globe, then that will also not be allowed. Similarly, compounding fee, compounding fee which is paid for minor violations. Now there were, divergent judicial opinion. Now it is sought to be explained that compounding fee paid under the domestic law or under the foreign law, that will not be allowed as expenditure. Similarly, there was one more controversy, and that controversy was that if pharma companies now doling out certain benefits to the physicians and the doctors in the form of foreign travel, hospitality, or conferences, now whether that expenditure can be said to have been incurred for the purpose of business, or whether can be said to be incurred for a purpose which is an offense or which is prohibited by law, because Indian Medical Council, in exercise of its powers, enacted and framed certain prohibitive guidelines according to which these doctors and physicians were prohibited from accepting these kind of freebies. But then came the question that it may be prohibited on the part of a recipient to receive, but there was no prohibition on the part of the pharma companies. So that distinction was made before the courts, and the courts allowed. But then again, this interpretation placed by the courts has not found favor, and therefore is proposed to be changed, though ostensibly with prospective effect. But then, even at the cost of repetition, I would say that in the form and manner, and by using such kind of an expression of the language, now which would tend to, or which would compel, which would tend the courts to interpret as if this position of law was always there, and therefore, in a way, to implement this proposed amendment with a retrospective effect. Then we have got a very important provision under the Income Tax Act, and that is called Section 68. Section 68 is very important, and anybody who deals in the taxation laws now perhaps reads this section even before reading the definition clause which is given under Section 2, because Section 68 is a section which creates a rule of evidence. And not only does it create a rule of evidence, rather it throws the burden on the shoulders of an assessee for such thing which, but for such provision, would have thrown the burden on the shoulders of the income tax department, because it is otherwise, in the normal sense, a cardinal rule of interpretation that a receipt which is ostensibly not income, now if it is to be taxed, then burden should be on the shoulders of the tax department to prove that this receipt though ostensibly may not be income, but then is income. But then section 68, by putting the burden back on the shoulders of the assessee, created a rule of evidence by saying that if there is any sum found credited in the books of an assessee, then its nature and source will have to be explained by that person. So you must have seen, if there is any amount which is appearing in our books of account, or for that matter in our passbook, I mean, let me not go into the hyper technicality. So if there is some amount which is there in my passbook, then the burden to prove, or the onus to prove as to that this is not my income, is on my soldiers. Otherwise, if you see, I mean, there is, I mean, negative burden, I mean, cannot, a person cannot be proved that this is not income. But then legislature, the sovereign, can do anything. So section 68 has been worded in such a manner that it will be for a person in whose books of account a sum is found credited to say and to prove, and not only to say, but then to substantiate also with evidence that it is not his income. Now, the law which we have read so far was that the onus or the burden on the assessee is only to this extent to prove that what is its source, but not the source of the source. So by the proposed amendment, now that source of the source burden is also sought to be put on the shoulders of the assessee in respect of loan or borrowing. So if you borrow a loan, this is very important, and it is applicable, I mean, it is applicable perhaps on all of us, because at one point or the other point of time, we all as an individual also happen to raise, I mean, loan or borrowing. So any person who raises the loan or borrowing now would be required not only to explain its nature and source, but then its nature and source will not be treated to be explained till the time and till the extent the person in whose name that loan or borrowing stands, he also comes forward and tells as to what is the nature and source in his hands. So this is a two-step source has to be proved by an SSE. So this is very important amendment which is going to impact all of us, whether we are in profession, whether we are not in profession, whether we may be dealing tax or we may not be dealing tax. Because in any case, as a citizen, as a taxpayer, we are dealing tax if not as a professional. Now, anti-tax avoidance measures, I mean, are introduced, and one of them is that in case survey takes place or the search takes place, undisclosed income is found. That undisclosed income now is shown in the return, and then set off of loss now is claimed, because if there is some business income which is discovered as a result of survey or search, but then if I have got any other business in which I have incurred loss, then existing provisions tell us that loss is liable to be set off against the income. So now this proposed amendment is an attempt to prevent such kind of set off, and it says that if any undisclosed income discovered as a result of search or survey now will not be adjusted against any loss, whether that loss is of the current year or whether that loss is brought from the earlier years, or even if there is some unabsorbed appreciations coming from the earlier years, even that will not be allowed to be set off. So all that the government wants, that whatever is the tax on the undisclosed income, you pay lock, stock and barrel, and no adjustment now is permissible. So this is that amendment. Then comes the crypto or the virtual digital assets, VDA, virtual digital assets, and really now it has drawn a fancy, and I have been told that even in our country a good amount of investment has been made in this. That is a different matter that the government is cautioning that there is no real value behind it, and people should be circumspect while making investment in this cryptocurrencies. But then be that as it may. So this year an amendment is proposed to levy tax at a flat rate of 30% on the income arising on the transfer of the virtual digital assets. So it is not, virtual digital assets is not confined only to cryptocurrencies. The way virtual digital assets has been defined, and that has been defined in a very comprehensive manner, That will include even the non-fungible tokens, NFTs, and whole lots of things. Even I myself must confess very candidly, I'm not aware. And if it is virtual digital asset, it is transferred and income is and income is earned on the transfer of that virtual digital asset, then section 115 BBH says that it has to suffer tax at the rate of 30%. But then there are a couple more riders, and those riders are that if there are any losses at the end of this person who has earned this kind of income, that will not simply be set off against such income. Similarly, if there is a loss instead of income from the transfer of the virtual digital asset, then such loss will not be adjusted against any income, and it will not be allowed to be carried forward. And so much so, the person who is making payment then is required to deduct tax, because the government wants to track. So they have categorized the persons, they have kept the threshold depending upon whether you are individual HUF and your turnover, is not above a particular threshold, then 50,000 rupees. But then if you are not a specified person, then 10,000 rupees, which is nothing. So every person then will have to withhold the tax and then pay it to the government. Now, what would happen to the incomes which have been earned in the past? No mechanism, no roadmap now has been shown in this finance bill, and therefore, according to me, if there have been gains in the earlier years, they will be taxed depending upon whether that has been made as investment or that has been made as a trading transactions under that capital gain or under that business, depending upon what kind of treatment we have given, what capacity you have dealt with cryptocurrencies. So there are gray areas with respect to the taxability of the digital assets, but then it would be enough if I confine myself on this point. But then whatever questions will be there, then I would deal. 144B, the faceless assessment. Faceless assessment now has become the order of the day. Its mechanics were put in place by a section, that section was 144B, and it was brought by TOLA only. But then there was not a very pleasant experience at the end of the tax department, because lots of writ petitions were filed straightway to the High Court against the assessment order on this ground that the mandatory conditions of the sections were not fulfilled, and therefore this assessment order has turned to be or should be declared as non-est. Now that section, which was proving the nail in the coffin, now has been sent into the Bay of Bengal, is proposed to be removed, and then some changes have been made here and there, and of course permitting an SSC to avail personal hearing through the video conferencing, which was not there earlier. It was there earlier, but then through the scheme on demand. Of course, it is on demand, but it has been made now part of the Act itself. 194 IA probably was referred by Yogesh ji. 1%, the transferee is required to transferee of an immovable property, and that immovable property should not be the agricultural land. Agricultural, anything which is relating to agriculture is a holy cow. So any transfer of an immovable property other than agricultural land having consideration of more than 50 lakhs of rupees, the transferee is required to withhold 1% of the consideration paid. But then the receiver, the seller, the transferor, now was required to pay tax with reference to the stamp duty value in case the actual consideration received by him was less than the stamp duty value. So there was problem of mismatch, because the transferee was deducting 1% on the actual consideration paid, whereas the seller was showing his capital gain based on the stamp duty value, assuming that the stamp duty value was more. Therefore, 194 IA is proposed to be brought in line in order to remove this mismatch, though that is a different matter, that even after the proposed insertion of this amendment, that mismatch will not go. Mismatch may still arise. But let us not go into it. Now it seeks to say that 1% of the stamp duty value or the actual consideration paid, whichever is higher. So this is now proposed. Then we had got one provision that if under some arrangement or agreement with any non-resident Indian, if the tax was to be borne by the Indian party, then Indian party, though was bearing the tax, maybe was paying the tax, but then disputing that it is not liable to pay. So a remedy was given to this party, Indian party, to file an appeal before Commissioner Appeal, but after paying the tax. Now this provision is somewhat tweaked and rationalized, and rightly so, by saying that you first of all you make application to the assessing officer and let assessing officer dispose application of passing an order, and then if you are aggrieved still by that order, then you file appeal. So the straight appeal to the Commissioner Appeal in such a situation is dispensed with and is substituted by a more logical way. Now regarding the trusts, I made a brief reference in the beginning. Now trusts, provisions have been overhauled in a very big way, and that is that in case some unreasonable benefits are sought to be passed on the trustees or on the managers or the relatives or the concerns in which they have substantial interest, then apart from the tax liability that will be there because of giving such kind of unreasonable benefit to these persons, specified persons, then one penalty is sought to be inserted, and that penalty is penalty under section 271 AE, which empowers the assessing officers to impose penalty, and kindly see the magnitude of penalty. It says that penalty shall be equal to the amount of the unreasonable benefit passed on to these specified persons, and that too on first offense or first default. But then if the default happens on the second occasion, then there will be 200% of the income. Kindly mind it is not tax on that income, but 100% of income or 200% of income, depending upon whether it is a first time violation or it is a second time violation. So this is very harsh provision. Then amendment has been proposed that now the board will prescribe as to which books of accounts will be kept by the charitable trusts, institutions, funds, hospitals, educational institutions. Where would they be kept? For how many years, would they be kept? So this is good, but then I always ask a question. Now there is an existing provisions for persons other than professionals, according to which the board ought to have prescribed, but then nothing has been prescribed in all these, right from 1961. But then for trusts and institutions, though they were getting their books of accounts audited from several years, but now, and obviously when they were getting their books of accounts audited, then books of accounts existence were there. But now what is sought to be inserted is that the board will prescribe as to what kind of books of accounts for how many years, should these books of accounts be kept and where should they be kept. Then it is proposed that 85% of the income is required to be applied. So what is the meaning of application? So it is proposed that since the meaning of the word application is that it should actually be spent, and therefore even if there is some liability as per the method of accounting or mercantile method of accounting, then such expenditure will not be allowed, will not be treated as application unless it is actually paid. Therefore, this proposed amendment will force all charitable trust institutions and these kind of organizations to switch over from mercantile to the cash method of accounting. And I think, that is not a progressive way to do the things, because the mercantile system of account is considered a very scientific and authentic method of accounting. Cash method of accounting, I'm not saying is unauthentic, but then as compared to the mercantile system of accounting, cash method of accounting definitely, stands on a lower pedestal in that sense. Then the principal commissioners now can cancel the registrations on certain additional grounds. Only last year, the amendments were made empowering the principal commissioners to cancel the registration on certain grounds. Now, within a period of 1 year, before much, before much water had flown in Ganges, it was considered in this finance bill to incorporate some more grounds on which principal commissioners, can cancel the registration. And the consequences, as I said in my initial remarks, the consequences of the cancellation of the registration has got very far-reaching implications, because there is section 115 TE. It says that when the registration is cancelled, then the fair market value of the assets as reduced by the liabilities, that will attract a flat rate of 30%. So it has got very severe consequences. I'm not saying that certain trusts have not misused the benefit of exemptions given by the government, but then to make such a law which are archaic, assuming that such kind of practices are perniciously followed as a rule, not an exception, probably that may not be called a good way of drafting the law. So friends, now I will give quietus, and if there are questions, then I would be pleased to take. Yogesh ji.
Hanji. Thank you, sir, for giving a brief about the changes in the income tax. And now the house is open for the question answers. You can raise your questions.
Yeah, there is a one good question which I wanted to address, but then I forgot. Now, whether bringing the provision to tax on this virtual digital assets, including cryptocurrency, now is in a way of vindication or affirmations of the legality of these transactions. So government has clarified more than once. Even Honorable Finance Minister, Revenue Secretary, now they are on record to say that taxing of an income is one thing and all options are open, and therefore it cannot be said that merely by taxing now we have approved in an oblique manner on the legality of these transactions. Therefore, because all of us know that even Income Tax Act does not make any distinction when it comes to taking the flesh or its pound of flesh, even if it's a smuggling income and the tax is paid by the smuggler on its income, though those instances may not be many, but then that doesn't mean that a smuggler then can claim, since he has paid the taxes, he has filled the coffers of the government to some extent, and therefore even the government and I stand on the equal pedestal, and therefore this illegal action should be condoned. No, it's not like this. On the same parity, the taxing, because Income Tax Act is quite socialist in this to this extent in its approach. It doesn't make any distinction between the good money or bad money. Now, even out of the bad money, it wants to take out its good amount of share. What is legitimately due as per the act, as per the provisions. So therefore, we cannot put the cart before the horse, that since you have taken your own share, and therefore now we are accomplices, and therefore now you cannot say it's illegal. No, it's not like this.
Hi, sir.
One more thing which is coming out of this discussion is that suppose a company is investing in cryptocurrency and is showing that investment in its balance sheet. So when you are saying it is a illegal asset.
No, I'm not saying. I'm not saying. Reserve Bank sought to say by issuing a circular, that circular has been passed by the Supreme Court. Therefore, as on today, we are standing on the no man's land. We cannot say as to what is, because government has also said all options are open. and obviously the government uses very cautious words because the government is yet to take a firm stand, and the government has said that we are in the midst of consultations, and therefore they may say it as illegal, they may say it irregular, they may say it otherwise. They are sovereign. Sovereigns are very powerful, and
when they are saying that it is an illegitimate currency or
they
whatever.
Yogesh, they have not yet said anything about it.
No, but the secretary or somebody from the government said that it is not. It does not mean by taxing that we are legalizing the investment in crypto.
So I mean the converse is not true. Then it doesn't mean they have said we cannot put the words into the mouth. It cannot be said that since they have said that merely taking tax does not mean that we have legalized it, doesn't mean that it is illegal. There may be other better terminologies which can be used by the government. The nature of these transactions may be found on a I mean in a different manner later on, because now these things are of such a recent origin. Now economies are struggling to cope with, I mean, as to ye hai kya cheez? I mean, what are these things? Where would it impact? Whether it will be beneficial to the economies or not? Because one thing which has been said, and today which I read in the newspaper, the government has administered caution that those who are dealing in such currencies kindly should remember there is no backup. And somebody was telling me on some other platform on which I was speaking, and he was dealing on in this cryptocurrency very big way. He was saying that recently there was a hacking, and it was the fourth largest heist made in the history of the mankind. So this system may not be foolproof, though it is considered blockchain technology is foolproof. But then human minds are ingenious. Even in India, there are certain pockets in different states where the entire village is involved in such kind of hacking. So human minds are ingenious, and therefore, uh, since I myself do not understand much, though now I'll start trying to understand this, because I have been the person now who enters into any market when it is almost at the peak. So I would try to understand, may not enter into it. But then even I would say that government also appears to be, if not that much ignorant as I am, but then government is also ignorant about its consequences.
One thing that I just wanted to understand that was.
Sir, आपकी आवाज नहीं आ रही sir. Yes sir, yes sir, yes sir. Now.
Hello, can you hear me?
Yes, can I raise one question?
Yes sir, please sir, please sir.
Please, sir.
Jagannathan here.
Yes sir.
CMA. You see, you have very wonderfully explained on this digital assets. And as a concept, it could be an infant stage. But any common sense indicates that it is going to be the future. I mean, even an ordinary person who doesn't enter the stock market, after having read something on the paper on digital currency and the debate going on, is sure that it is going to be the future. So would it not be more right direction that a government like India, where such a huge population is there, and there's a scope for such transaction is large, does a detailed study, take an official position, take a blockchain as a proper process of a system, and then come up with tax provisions? Now, what will happen with this illegal thing? Those who are genuinely acting on this under the guise of that government doesn't recognize these transactions are suddenly put to break. It could be a loss. So what that group will try to do, will try to get a power on and try to make some amendments and get into confusion. The legal tender is on the way out. By own reckoning by the Prime Minister that we need digital transactions more and more. The only difference is, instead of my means government doing it, a system is doing. You take a foreign exchange market. The forex market is not regulated by any law. But that is wonderfully doing in so many trillion times the commodity transactions. So as an expert, would you not think that the government should have taken some time to go through these details more carefully and come out with its own blockchain concept and regulation on the blockchain so that the tax becomes more genuine.
Very right.
Yes.
Very right, sir.
Thank you.
The only thing which I would add is this: since the government has said it is unregulated, there is no, value behind, what is happening. Therefore, there may the system may collapse, and people may lose their money. But you said that government is also considering in issuing CBDC, that currency. But then what worries the government as of now, that there has to be some systemic backup, so that it should not become a lottery business, or it should not become something, which at the end of the day one finds himself standing on the street. But then taxing at this moment, government probably could not resist from taking its money out of this before it could decide whether this is legal or illegal.
Yes.
So to that extent, one may ascribe this
Instead,
hastiness as the greed, or whatever, but then the government has done it.
instead of this currency, which you have very nicely explained on various provisions on the taxation, I am tempted to ask one question.
Yes, sir.
There's a top corporates total income by own government reckoning runs into more than 10,000, 15 lakh crores and all. Now, for all its requirement for revenue expenditure, especially on the health, education, and poverty section, it can put a blank tax that anyone is having a profit beyond 500 crores should submit a tax of, say, 2 lakhs, 3 lakhs, and all. And a very casual calculation by me, it come to an extent of 1,40,000 crores. So would you recommend such a provision, blank provision?
It is already there. This cess which is collected.
Cess is 12% with very progressive. I'm saying blunt. Collect 1,40,000, divide by the top number of people whose companies are earning money and get a money.
No, there can be arguments for or against such kind of a proposal.
This as a cost accountant, I'm telling you,
For
this is a concept of this is a concept of cross subsidization. A parallel you see in many of the power distribution company charge the commercial tax at a very high rate, and domestic consumer less than 100 they make it free. Like for example in Delhi. So that concept, if it is put in an income, and all these types of huge income being enjoyed by the corporate world, and then after enjoying for years, they come to IBC. As an IP, I tell you, they dissolve the company and they become an insolvent, they enjoy it. So why not government think of a novel approach to collect tax from such people? Thank you. It was just a thought.
Yes, your observation, but your suggestion is overloaded with a motive on the part of the corporates. So
it's evident. Yogesh will hear me out.
No, we cannot paint them blankly like this. Yes, black sheeps have always been there. In all walks of
good
life.
and bad. I am saying take some good. Ask Reliance to pay
let's
1,000 crores every year.
Jagannathan sir, let us remain focused on budget.
No, very good. Yogesh ji, very, very pertinent questions have been raised by Jagannathan sir.
Yes, sir. Yes. So, any other questions by the participants on the direct taxes or on the budget?
So let us now wind it up.
Santoshi, no questions?
Hello.
Mr. Saab? Yeah.
Usually I don't have any question, but would like to say that it was well delivered speech by Rakesh Gupta sir, and the detail was very excellent actually. In the point by point discussion it was happened, and I would say that being a professional, we are the part of the country's development since in 1950 when finance minister were presented first budget. It was approx 176 crore, Now we are into the we are at approx 39.4 lakh crore. So every year we are increasing by approx 20%. In previous year it was approx 33 lakh crore, and it is now expenditure has gone up to 39.4 lakh crore. And being a professional, that nitty gritty, we should understand that how we can contribute in this you can say development to the country. And as Rakesh sir said about the cryptocurrency, actually if government has declared that they are also going to have a cryptocurrency, and that means they have adopted that uh, they will launch a cryptocurrency, and it will with the help of this blockchain technology. So ultimately you can say that by the outright pressures from money market, they have to launch their own currency, and they have directed that approx 30% they will charge tax on that currency. So that means in coming days that will be regularized in the our country also, and that is going to be a sea change actually, and it will be a main part of our economy. And I think here eminent personalities are in this group, like Suraj Prakash sir, Yogesh Gupta ji, and our chairman sir is also here. So and our other council members are also here with this. I think I can see
One more,
good faces here. So
one
thank
more
you.
point, Rakesh
Yes,
ji.
sir.
Yes,
Yes,
sir.
sir.
But I think that bonus stripping has something has been mentioned about the bonus stripping in the budget.
Yes.
That bonus stripping will not be allowed now, meaning thereby that the losses due to the fall in the share price after the bonus issue, it will not be allowed to be adjusted, and it can be allowed only against the capital gains arising on the issue of the bonus shares. So can you a little bit further elaborate on this?
No, I cannot elaborate except to say this bonus stripping or dividend stripping itself, I mean, has been the subject which borders on the ethical aspects. I tell you, I mean, about 7 or 8 years back, I was arguing one matter before Honorable Supreme Court on behalf of the SSCs on the dividend stripping, bonus stripping. And I tell you, what was his name, the Lordship? But then both honorable judges said, is this permissible in law? Is this permissible in law that you arrange your transactions in such a manner that you can claim the benefit of the losses, maybe to a particular extent? So that is the issue. I have not, though I have read it, but then I have not devoted much energy on this point. And but then it is not in respect of all securities. Particularly, I think it is confined to only one security. I mean, the provision which has come, but I am not aware. Therefore, it will not be proper for me to comment on.
Any other questions from the participants? Then we can close. Otherwise, because we have Mr. Suraj Prakash who will be speaking a little bit on the indirect taxes, etc. Also.
Hello, Rakesh ji.
If you kindly permit me, may I leave because I have to attend institute's function.
We can take the last question.
Okay.
Yeah, Mr. Saria.
या
हाँ जी
हेलो
सर, नमस्कार.
हाँ नमस्कार सर. एक जो बिल अपडेटेड रिटर्न में ये था कि आईटीओ को इंफॉर्मेशन यदि पास कर देते हैं इसी पे तो वो नहीं भर सकता.
क्या चीज
यदि ऑफिसर अपडेटेड रिटर्न में ये क्लाज है कि यदि कोई इंफॉर्मेशन आईटीओ उनसे पूछ लेता है कि भाई आपकी ये इंफॉर्मेशन कोई भी पास ऑन करता है तो उसके बाद आप अपडेटेड रिटर्न उस मैटर पे नहीं भर सकते. ऐसा कुछ था इसमें?
नहीं, ऐसा नहीं है. इंफॉर्मेशन अंडर सफेमा, अंडर ब्लैक मनी एक्ट, अंडर पीएमएलए, अंडर पीवीपीटी बेनामी एक्ट, एंड दैट टू व्हिच हैज बीन कम्युनिकेटेड. ठीक है ना?
हाँ, तो communicated उसी एक्ट में है। यदि 148A में कम्युनिकेट करता है तो वो अलाउड है।
नहीं, उसमें उन्होंने एक डिसेबिलिटी ये दे दी है कि यदि कोई किसी का रीअसेसमेंट पेंडिंग है या कंप्लीट हो गया तो भी नहीं कर सकता है, चाहे कम्युनिकेट किया हो या नहीं किया हो।
अच्छा, नहीं 148A में जो है नया नोटिस देता है वो ड्यूरिंग द
हाँ।
ईयर, और उसके बाद हमें पता लगता है कि ये इन्फॉर्मेशन डिपार्टमेंट के पास पहुंच गई, तो हम उसको भर सकते हैं रिटर्न को बिल
देखो,
अपडेटेड।
मेरा ये मानना है सरिया साहब कि दैट वन रीअसेसमेंट प्रोसीडिंग्स स्टार्ट with the
Not start.
issue of notice under section 148, not under section 148A. So
Yeah.
जब तक 148 का नोटिस नहीं आएगा तब तक it cannot be said that the reassessment proceeding is pending.
ओके, ठीक है। एक छोटी सी और बात बताओ कि ये जो 144B में जो अमेंडमेंट आई है, तो ये रिट पिटीशन वगैरह का क्या फ्यूचर लग रहा है?
नहीं, writ petitions, definitely the writ petitions have been filed to the best of my knowledge on primarily the grounds of non-observance of the principle of natural justice. So
Yeah,
whether
yeah.
subsection 9 goes, then also, I mean, since there was miscarriage in the observance of the natural justice, therefore the High Court, I mean, will not let these assessment orders go.
ओके, चलो, लेट अस होप फॉर द बेस्ट।
Yes, yes, yes.
थैंक यू सर।
So, since he has to go to some other programs, because today is a CA is having some lot of programs in Meridian, and I think he is being a speaker in some other program as well. So let me first propose a hearty vote of thanks to Dr. Rakesh Gupta for delivering his detailed analysis about the budget and giving us a brief about the various changes which has taken place in this current budget. So I'm really thankful to you, sir, and we will look forward for your future
I am honored, sir.
presence in the
Thank you,
program.
sir. I am honored, sir. I am honored. Thank you, sir. Thank you.
On behalf of the chairman, NIRC, ICWA, and Mr. Santosh Pant, secretary, and all other regional council members who are present today, I'm really thankful to you, sir.
Thank you, sir. Thank you.
And now I will, you can, sir, log out because since you have to go. And now I will request Mr. Suraj Prakash to start his address on the indirect taxes. We will take only about 10 minutes more, and after that we will close. Kindly be patient for hearing Mr. Suraj Prakash. Mr. Suraj Prakash, as already you know, he is a ex-director with BEML. So we would like to hear from him now. Thank you.
Thank you, Yogesh ji. Very good evening to all of you, Shailendra Paliwal ji, Mr. Tara ji, and others, Yogesh Gupta ji. Of course, we had the opportunity of listening to a mesmerizing address by Dr. Gupta, covering various key amendments which have taken place in the direct taxes domain. And the way he explained them, giving the details about its history, its rationale, how it happened, when it happened, that speaks volume about the command he has over the subject and the knowledge which he has. And he not only tried to explain from the tax perspective, but also gave the perspective of the assessee and how adding to it the legal perspective also, and with respect to its challengeability and how it could be litigated in future. After the GST came into picture and indirect taxes ceased to exist except to the extent they are applicable only on certain products like petroleum products, natural gas, etc. So the indirect taxes portion in the budget has lost its sheen. So everybody is aware of it because that domain has now shifted to the GST Council and which keep taking decisions throughout the year. So we are left with the budget as far as indirect taxes is concerned, some changes in the custom duty regime or some changes in the GST which comes through the finance bill, which essentially are the amendments in the CGST law. And so these changes are not much like what it happens, but there are a couple of changes. There are a number of changes, but the couple of changes are something which may be more relevant or important from that perspective. So one is that in GST law, all of you are aware that the time limit to avail input tax credit in respect of any supply which you have in respect of any supply in one particular financial year is that you can avail this credit up to the due date of filing of return for September in the next financial year. That is, you used to claim it up to 30th of September and include it in the return of September of the next year. After that, if you have not availed the credit, it used to lapse. So now this time limit has been announced till by another 2 months, so 30th of November. So that essentially is, you can say, a little bit of relief. And similarly, for credit notes also, which were supposed to be issued up to 30th of September, that date has also been announced up to 30th of November. So this will be a positive change. But what there are certain changes with respect to certain conditions which have been imposed or which are going to be imposed. Of course, these changes will happen from a prospective date once they are notified from the date which will be notified later. If all of you remember that input tax credit, when the original law came, there were no restrictions per se. There were only 4 conditions, like you should have received the goods or services, you should have the party, you should be in possession of a tax invoice, or that is GST invoice of the supplier, and supplier should have discharged the tax, but you were still allowed to take the credit, and there was no restriction per se. But now, slowly, initially it started with 20%, then 10%, then 5%, and then later even 5% restriction, which was there of the 5% limit of the credit which you can avail over and above the invoices which are reflected in your inward supply return. So that essentially is getting auto-populated from the outward return which are filed by the suppliers. So that essentially means you are dependent a lot on your supplier in case he makes any mistake, or he by whether it is an inadvertent error or it is any other error, you used to miss out. From 1st of January, you are not eligible to take any credit unless it is reflecting in your inward return. So that's a problem. So if your supplier is missing out, you are missing out on the credit too. But now in GST law, they are making some amendments in the section 37, where in certain conditions and restrictions will be imposed for furnishing of details of outward supply, and which will be communicated to the concerned recipient. Now, ITC can be availed only if credit has not been restricted in details which are communicated to the buyer. So that is a kind of a restriction which is being made, and these restrictions will include if the supplier in his outward return GSTR1 has defaulted in payment of the tax for the relevant period. So if he has defaulted the payment, then also there will be a restriction. You will not be able to take the credit. Or if the outward tax or the output tax which the supplier is paying in his GSTR 3B is less than the prescribed limit, vis-a-vis the tax which is supposed to pay on the outward supply, which is reflected in GSTR 1, then only there will be a restriction. And also in case the supplier who has availed ITC in excess of the prescribed limit, which is available to him based on his GSTR 2B. So all these conditions are being built into it. So this essentially means if your supplier is doing something wrong, some mistake, as a buyer you are getting impacted. So these kind of provisions are going to be impacting the industry very much, and how these things are happening will be known to the buyer is that section 38 has now being amended. It says that the details of inward supplies and the input tax credit to the recipient will be communicated by means of a auto-generated statement which will contain all these details. So issue was basically hanging around that some of the assessees or basically the taxpayers were contending, how do I know whether the supplier has paid the tax or not, or whether. Now, not only the payment of tax, now even if he avails the input tax credit wrongly, if he pays the output tax which is less than the output tax which is declared in the GSTR1, all these conditions are going to deny you the credit. That essentially means it is the industry who is going to have cash flow issues, and even though the liability of the supplier will still remain to pay the tax from a retrospective date and pay the interest on thereon. But the buyer per se, your cash flow will be impacted, you will be denied the credit, and in spite of having received the goods, in spite of having received the invoices, and in spite of having made the payment to the supplier, you will not be eligible to take the credit. So these are some of the sections which in my opinion, are going to impact the industry, their working capital, their cash flow issues, etc. And also with respect to the cancellation of registration, certain conditions have been prescribed for composition taxpayers. If he has not filed his GSTR4 return beyond 3 months from the due date, presently his condition is applicable where he is not filing 3 consecutive returns for 3 consecutive taxpayers. And for the other than composite dealers, if you are not furnished returns for the tax periods, such consecutive tax period as may be prescribed. So this is something which wherein the power will be vested with them. They will decide as to in what situation the or how many defaults will put you into a situation where registration can be cancelled suo motu by the assessee. And but one good thing which is being done and which is being done from retrospective effect is that the levy of interest on input tax credit, which has been wrongly availed and utilized, that was a point of contention earlier, whether merely availment of interest, availment of credit itself will attract the levy of interest or not. Now will be the availment of the input tax credit and utilization. If it is there, then interest will be applicable only on availment, and it is an amendment which will happen from the retrospective date. And the interest under section 53 will be uniformly applicable at 18%, and in some cases were there for 24% that has been withdrawn. So these were essentially the major changes in the GST law. And as far as custom changes are concerned, I will not go into the details of that, but just to mention briefly that most of the changes in customs are basically driven by the basic philosophy of the government, that is Make in India or Atmanirbhar Bharat. The cases or the industries where sufficient domestic capacity exists, they are withdrawing the duty exemptions or duty concessions which were available to them. Either they have been withdrawn forthwith or they are being withdrawn in a phased manner. Like for example, the duty concessions which are available on import of capital goods through various notifications or by under the project import route, they will be gradually phased out, and a moderate duty of 7.5% will be done. This is because the now time has come when there is a sufficient domestic capacity in for the capital goods in the country. Similarly, in other segments also, the amendments which have come are essentially driven by this particular philosophy, that if capacity is there, there is no need for or rationale for continuing the exemption. But wherever there is a dependence upon the foreign supply, sufficient capacity is not there, they are continuing with the exemption or allowing the exemption in such a so that the cost of production for the domestic industry of those items which are imported, they do not go up, and their cost competitiveness is not impacted. And one amendment in custom duty is specifically with reference to the green development in the budget, which Mr. Yogesh Ji talked about in his initial remarks. And all of us are aware that there is a big focus of the government on the green. So not only that they have come out, they are coming out with an ambitious plan of 280 gigawatts for solar by the year 2030, which is a very, very ambitious plan. They are also coming out, they have made an allocation of 19,500 crore for PLI for the solar manufacturing sector. And here the priority will be to those manufacturing units who are having integrated manufacturing units. That means the entire supply chain of the solar will be covered, right from polysilicon to manufacture of wafers, from manufacture of wafers to manufacture of cells, and from cells to modules. So what will happen is that this will create a complete backward integration, which will bring in a lot of investments. It will create a lot of employment, and lot of employment and jobs means more income, more disposable income, more growth. So this is the kind of a focus which is there in the solar. And apart from that, battery swapping policy, all we know, is being brought out to give a fillip to the electric vehicle segment. Because government is fully aware that unless you make the electric vehicle more simpler, their charging, etc., is still an issue. It takes time. Unless you bring out a policy wherein you go to a station instead of charging it and spending time, you get another set of battery. This kind of policy is going to there. It is going to give a big push to the EV and to the green development. And in this regard itself, government is coming out with a very specific provision wherein the petrol which is not blended with ethanol, they have brought out with the excise provision in this regard. From 1st of October, if you are buying a petrol which is not blended, then you will have to pay 2 rupees extra excise. And if you consider the sales tax and other impacts, the impact will be a little more. So that's again a kind of a push, because straight away EV cannot replace the conventional fossil fuel based model of transportation. It will take years to phase it out. But in such time, there has to be a continuous focus on reducing the carbon emission in this particular fossil fuel segment also. So towards that end, this kind of a provision is being done to give a fillip to the green energy. So green development. So these are the few things which I thought may be relevant to our members to understand. And with that, I close the my address. And if any specific query is there, that can be addressed. Thank you.
सर जी, आप कुछ आगे फर्दर इसके बारे में? शिवेंद्र जी, कंक्लूडिंग रिमार्क्स.
हेलो सर. हेलो. मैं चाहूंगा कि वोट ऑफ थैंक्स तारा सर की तरफ से हो. हेलो सर. Tara sir.
I request Tara ji to kindly propose a vote of thanks.
Oh, okay. Thank you, Paliwal sir. And indeed, it was a very knowledgeable session by Rakesh Gupta ji, and of course, supported by our Yogesh Gupta ji and Suraj Prakash ji. And I think this is a very successful session. Almost, I think, more than 150 people, they joined this, and they gained some inputs about this budget. And indeed, it's going to be, this budget is going to be a great budget, and we anticipate that the growth of the GDP of our country, it is estimated around 9.2%, which is the maximum among developed countries. So indeed, we should be satisfied with this budget. And thank you everybody for joining this program and making it a successful program. Thank you everybody.
Thanks to all the participants and the NIRC CMA.
Thank you sir.
And we will try to have more programs like this with the help of the chairman NIRC and the other office bearers. Let's go ahead with this new year on a positive note. As has been said in the budget, that we are moving towards the 5 trillion economy. So with this budget, as I said in the beginning, that it is, supposed to be a growth economy budget. So let's hope that all ends in the well, and we hope for the best now. Thank you very much, and thanks all the participants for listening to us.